Hello everyone and welcome to this latest video discussion as part of the RICS Tech Partner Programme. My name is Andrew Knight and I've been with RICS for over 12 years now. My role is to look at the impact of data and technology right across the built and natural environment, and with over 110,000 members working worldwide, right across the life cycle from land, planning and development, construction, finance, valuation, brokerage, building, surveying, asset management, building management. It's a really rich canvas upon which data and tech is having a really profound and valuable impact. And indeed, our members also work across all the different asset types. So once again, working on land itself, residential, commercial, alternative assets and infrastructure. So once again, a hugely broad canvas upon which data and tech is bringing real benefits. And today I'm really glad to have Ashley Osborne join me from MyPropTech. So welcome to the call, Ashley.
Hi, Andrew. How are you doing?
Very, very well. And it's great to have you on the call. And I guess before we get into the bits and bytes and the kind of things you're doing at MyPropTech, it'd be great to hear a little bit about your backstory and that of your co-founder as well.
Sure. Yep. I've been working in the real estate industry now for more than 20 years. I would say the vast majority of that time's been in two different parts of the industry. Firstly, in the commercial industry, where I worked in Asia in the corporate solutions of a large tier one chartered surveying firm. And then I moved into the residential development space. I spent most of my career, probably the last 15 years, working with large format residential developers and helping them promote those developments to investors offshore, principally in places like Singapore, Hong Kong, China, Malaysia, with a small operation in the Middle East too.
Great. And what was the kind of origin story of MyPropTech before we get into the details of what you actually deliver there?
I think after spending quite some time working in that new build residential development space, I think we recognized that there was a real gap in the market in terms of the way that it worked and what could be done. And so what we really wanted to do was use technology to really challenge the way that people look at the market, to try and create more value for everybody in the industry. And I think where the sort of rubber hits the road in terms of what we do is we create a lot of value for both developers, but also for people buying property. And we just wanted to create an economy of scale where we thought we could create a genuine saving for people when they were buying property off plan.
Thanks, Ashley. Now, I guess it'd be nice, perhaps, for our listeners to focus in on one of the markets that you're operating in and talk about the UK, where I know so many of our members are based. I mean, if we look at the UK housing market and the argument that there is indeed a crisis within the market, how would you describe it? What does that really mean for the UK housing market?
Well, indeed, and the UK is one of our biggest markets. Look, most markets around the world have got what are, people refer to as housing crisis. I think in the UK, it's probably more acute than many other places. And really what it means is that there's a shortage of new housing that's being delivered to the market relative to what would be absorbed by people coming through to the market, whether that be through immigration or whatever. And what that really looks like at the moment is, depending on whose study you look at, there's a requirement for somewhere between 300,000 and 340,000 new homes every year just to be delivered to the UK to meet existing demand and future requirements. And at the moment, I think the UK is set to deliver something like 240,000 new homes in the 2022-23 year. But the problem really is some of the impacts of COVID and obviously more recently the issues with rising interest rates are going to mean that number and the gap is going to get a lot bigger again. So, we're expecting that new housing delivery will be somewhere in the mid to high 100,000s. So creating a gap of something like 40% between what's required and what's demanded. And that's across all housing tenures. So social, rented, but also owner occupation.
Now, I suppose it's a deliberately sort of obvious question, and you'd normally expect in a kind of a responsive marketplace that huge gap between supply and demand would be filled, that the market would respond on that supply side. Well, why do you think the UK still isn't building enough homes of those different tenures?
Well, I think the problems in the housing market are quite complex, and I think people try and drill it down to one or two things, but the reality is in order to deliver new homes, you need a number of things to work in your favor. So the availability of the land market, the ability to get planning relatively quickly, the ability to have contractors to deliver that housing, finance for the housing, and then to be able to sell that product at a profit so the developer can make a profit. Obviously, developers won't deliver housing unless there's something in it for them. And I think probably the biggest issue is most of those parts of the market probably aren't operating very efficiently at the moment. So it's not just one part of the market. I would say it's probably all of them at the moment. There are issues across the board.
And as you say, there's a number of sort of moving parts there, or moving participants, if you could use that phrase. And I guess it's an oft quoted criticism that governments tend to focus very much on the kind of the supply side, or rather they focus on the demand side in terms of encouraging through Help to Buy and other kind of fiscal measures, but don't seem to sort of do anything physically on the supply side. Is that because it kind of falls into the too difficult piece?
Yeah, I think so, and I think that's probably the biggest problem. I think you're right. I think what governments have done around the world, the UK is not different to anywhere else, is it's been a real focus on actually saying, well, what we'll try and do is stimulate demand in this part of the market and then suppress it in another part. And what that generally has meant is that they want to suppress buy-to-let landlords typically coming into the market and actually create ways for first-time buyers to get on the housing ladder. What that actually does, though, is it creates pressure at different points of the market and not others. So what we've seen from schemes like Help to Buy is property prices below, say, £600,000 really going up quite quickly, but then no real secondary market because there's not a great deal of support for it. And I think that is probably the easy lever for most governments to pull. But the reality is the only way you're actually going to solve the housing crisis is by supplying more housing, and things like improving the land market, improving planning laws, all those sorts of things are they're really, really long-term things. And probably for most governments, the rewards are several election cycles down the road. So it does make it very difficult for them to say, we're going to spend all this money on fixing something which might come in 10 years' time, because it's not very good from a vote perspective.
So, given that there are things that governments perhaps could do and haven't done, or long-term issues that are structurally quite challenged, can the property industry itself do anything to deliver more housing? And what's in their gift to actually change the way they behave?
Well, I think there are things that could be done already. So I think it's obviously creating awareness, and obviously the RICS plays a pretty active role in lobbying to government to try and explain what's going on in the housing market. But I think one of the biggest issues that we see in the market at the moment is just a lack of data. So for somebody coming into the market to understand perhaps what the land market looks like, what transactions are looking like from an actual capital value perspective, and also even more lately with build-to-rent funds coming to the market in the UK, there's not a great deal of data for them to say, well, actually, if I buy this building in this location, what rents will I be able to achieve? There's not a great deal of data across any of those parts of the market. So perhaps one of the most obvious things that the industry could do as a whole is just make data more available for people to use. And then I think the other thing is just recognizing that there are things that can be done within some of these larger surveying firms to actually improve processes as well. But I think probably the biggest issue is money and also incentive. If you're a large agency at the moment, you control the market. There's not a great deal of incentive to actually do something different to change the way that people look at the market.
So I guess to cut to the chase, given the context we're discussing this in terms of data and technology and PropTech, what can PropTech do? There's obviously no one silver bullet, but how can PropTech contribute to solving this crisis?
Well, I think what PropTech can do realistically, generally across the market, is improve that supply side. So there are a lot of inefficiencies in all parts of the market. So whether that be from helping developers better understand what's going on from a land perspective, understanding what could be built, what planning might look like, what the capital receipt might be achieved, all of those things are things that could be automated over time. The bit that we've actually specifically chosen to focus on is the actual sales and marketing side, because we think that's where we can have the most impact. So from our perspective, when a developer goes to market to sell their product, it looks very different to perhaps what most people think. In order to get a development off the ground now, you need to pre-sell something like 30 to 50% of a scheme, even before you put a shovel into the ground. And the reality is if your construction program, say 18 to 24 months, which would be quite typical in the UK marketplace, the type of buyers at the end, so say owner-occupiers, just aren't active. So what we look to do is create an economy of scale so developers can access early stage investors to create those pre-sales, which allows them to unlock some of these schemes and improve that process.
So before we go into a bit more depth about what your solution and your platform's doing, why do you think so far the kind of things that you're talking about with that PropTech can give to the market hasn't really taken off so much, hasn't really made that much of an impact? Are there kind of behavioral barriers or technical barriers?
Well, coming from a large tier one chartered surveying firm, I would say there's a number of issues. One is cost. So the cost of actually building these platforms, as we found ourselves, is very, very expensive. It takes a lot of trial and error, and there's we would say sort of code on the floor. So you have a lot of code on the floor, and that the reality is that that's expensive. You build technical debt throughout that process, and it is very, very difficult for somebody in a senior role in some of these businesses to say, look, we've got this great idea. We think it'll work really well. I've got no idea how long it'll take to build and how much money we'll spend, but don't worry, it'll be great. And that's not really the way that the CFOs in some of these big firms look at things. They sort of say, look, we need an immediate, delivery. Tell me what you can do that's going to improve, move the dial by 20% today. And big, large infrastructure projects aren't really part of that. The other thing as well is, I think a lot of these businesses have got a lot of latent redundant technology as well, that they've bought systems over the years. The bigger the surveying firms are, I think you tend to find across continents, they have different systems in different locations. They don't speak to each other very well, and it does make it very difficult to implement systems. And then also having the people. So, surveying firms have got a lot of great people in marketing and sales and all those sorts of functions, but what they don't have a great deal of is a lot of technical people that actually can build technology. And, those things are challenging. So I think it's a combination of those things, as well as, I think from an industry perspective, it is very difficult to say, we're going to build this thing that's going to completely revolutionize the market and therefore make a lot of what we do quite redundant, and therefore hit our bottom line. So there's probably not the incentive from within the industry for people to do it. I think the only way it happens is if people like us leave what they're doing and say, we're going to apply our deep real estate and market knowledge to try and build a product that helps people along that journey.
So digging deeper into that, Ashley, I mean, what is MyPropTech? What have you built? How does it work? What's the value it delivers?
So the platform itself is really designed to help people make better real estate investment decisions. And it's a two-sided market. So what we do for members, we're a subscription platform. We provide people the ability to make a much better real estate investment decision when they're buying a property. And from our perspective, that boils down to really three things. Firstly, it's understanding what a property is actually worth. So we provide real-time market data so people can actually get a sense of what the market looks like in a given location. We provide data for 3 countries at the moment: Australia, New Zealand, and the UK. People can see demographics, economics, market data, so pounds per square foot of properties transacted and what rents are expected. The next thing is, most investors are saying, well, actually, service charges are different, taxes are different, depending on where I live and what I bought. It makes a completely different tax equation for me. If I buy in a company or my own name, it looks different as well. So what we provide is the ability for somebody to analyze a property on a net after tax basis, so they can actually see, what do I get returned to me in my bank account every month if I'm to buy this property? And it allows them to compare multiple investments from different countries. And then finally, what you really want to do when you're buying properties, make sure you're actually getting value. So what our platform does is it tries to mimic what large investors do in the real estate market. And I think what most people don't understand in the new build market specifically is it's actually a two-tier market. So what you have is, you have large investors that go to a developer very, very early on in the development process, and they say, look, we've got a lot of money, we're really interested in buying your entire building, and what we will do is we will buy it off you at 80 pence in the pound, and you should be really happy because we've got an amazing covenant and we're going to buy the whole thing. Great. Everybody else doesn't get a discount like that. So if you're buying, later on in the process, you might get a few percent off the asking price, but not a great deal. What we try and do is mimic a space in between those two extremes, where we say to a developer, look, there's actually more value for you to sell 30, 40% of your scheme very early on in the process, where you give away perhaps more discount than what you would normally need to do to these retail investors, but less than what you would give to an institutional investor, and therefore everybody gets value. And we've created an algorithm that essentially aggregates investors together. They benefit collectively from the economy of scale that they create, and then they simultaneously exchange contracts with the developer. The advantage being is the developer sells less of the development early on at a smaller net receipt, which allows them to sell more later on at a higher capital receipt, and obviously the investor gets that saving too. So that's what we've done. We've also just recently built and launched a product within our platform for owners of existing properties, so they can actually start tracking the financial performance of the assets that they own. Because what we found from speaking to people in the market is there's a lot of property managers and actually landlords that are really, really great at managing day-to-day issues with property management. So that's things like, you know, collecting the rent and fixing the boiler, but very few are good at actually providing what I would call an asset management service, to actually say, this is what you thought you were going to get, how much money you're actually getting back on an after-tax basis, what does it actually look like, and are there ways that you can improve the performance of your investment? So it covers all of those elements for investors.
So you've built obviously an awful lot of functionality from kind of day one, if I can use that phrase. What's the longer term vision for where you see this kind of data and analytics and marketplace going?
Well, I think ultimately we see solutions like ours as being a key contributor to actually solving the housing crisis, because we think we're a vehicle to be able to increase supply rapidly. And I think where this sort of rubber hits the road and where we ultimately want to get to is that we have to start with investors, because they're the biggest market and they're probably the most active market for us. But where we want to get to is to aggregate first-time buyers with investors, because most of these markets have this traditional thing where they think that these offshore investors or buy-to-let investors domestically are actually increasing the price of property and pricing people out of the market. What we think we'll be able to do is aggregate all of those people together, so all of a sudden a first-time buyer is actually collaborating with an investor from Singapore, and together they create an economy of scale which they just couldn't create alone. So that's really where we see ourselves ultimately getting to.
And do you see that this concept to be, dare I say, that sort of holy grail of unique, in the sense that you're not seeing other platforms taking this kind of approach?
I think when we first started on this journey 3.5 years ago, we thought we can't tell anybody what we're doing because they'll copy us. And we spent a lot of time getting patents and doing all of those sorts of things. And I think the thing we recognized along the journey is it's actually very, very difficult to build tech. Much more challenging than what we thought. So yes, perhaps people will try and copy different elements of what we're doing. Obviously, we've got a bit of protection with our patents, but the reality is it's just so difficult. And the way that we've decided to do it in a multi-market way, so we have Australia, New Zealand, and the UK. I think it makes it very difficult for people to actually build things that mimic specifically what we do. But who knows what's in the future.
Indeed. Now, actually, to return to something that you touched on a bit earlier, if I may, you talked about a lot of the reasons why the larger surveying firms are kind of either finding it hard or not adopting technology. To almost turn the question around, what do you think that the larger surveying firms need to do differently to get the benefits of technology? Is it a case of working with more outside experts? Is it culture change internally? Is it moving towards a more agile approach where they do take smaller problems and get a return on investment more quickly? What do you think will be the catalyst that will help these larger firms get more technology?
You know, it's actually a really interesting question, and to be honest, I think it will depend on each of the different firms. I probably notice, if you look at the sort of main 5 surveying firms in the UK, I think each has a different approach to technology. I think some are a lot further ahead than others. But having gone through this journey myself, in obviously in a much smaller way, I think the only way that you can really implement technology is having a lot of technology specialists within the business. Now, that's very expensive. It also means that you're spending a lot of money on things that you don't really know what the answer is until you've actually spent some time coding and doing those things. So I think that's probably the biggest problem. But also, I think, and I think it's incumbent on the PropTech community as well, is there's a lot of PropTech products being built which actually don't really solve problems for either people in the market or actually participants in the market. So it does make it very challenging, because what we've seen so far in the PropTech space is there's a lot of people that know a lot about technology, but they don't know a great deal about the real estate market. So they tend to narrow in on one problem and say, we built this product that solves this problem. Now, it might not even be a problem that the industry has, but probably more likely, unless it fits within a workflow, it's very, very difficult for a company to integrate that in with what they're doing. So I think it's a combination of both. I think really the larger firms really need development teams internally. So, full stack development teams that can implement and install software. A more agile approach where they recognize that, there is going to be some loss, but ultimately the spend that is created will create economies and scale in the future. But I think, more meaningful relationships between the PropTech community and participants in the market, so they're actually collaborating and saying, I have this problem. If you're going to focus on a problem that needs fixing, that you're expecting me to pay you to deliver your solution for, focus on this one, because that is a real problem for us today. And I don't think there's enough of that going on at the moment. I think the UK PropTech Association is trying very hard to do that, but we're still not seeing a great deal of collaboration between those two groups.
Indeed, and I suppose that collaboration point neatly leads me on to my next kind of question, or sort of investigation, is a sense of, what do you think the kind of, when I say the implications of tech, one thing fascinates me generally when you look at kind of digitizations of sector is whether people look upon it as a way of simply automating what they do at the moment, or whether they genuinely see this as a way of doing things differently and digitize at the same time, because there is that danger that we merely just digitize a whole bunch of processes that are arguably not very efficient in the first place, but it's the way we've always done stuff. So do you think the industry sees it as a genuine, quite radical change of the way things are done, or just replacing the plumbing with some upgraded digital plumbing?
I think probably quite possibly that a lot of firms and people in the space look at it as being a quick fix and being able to implement some technology, and they replace the existing flow with another flow that's almost automated using technology. I think that's a very short-sighted view, and actually I think the problem will be people and companies who approach it in that way will deliver solutions on the surface that will ultimately become obsolete very quickly. They'll spend a lot of money chasing their tail, and I think it does require a deep dive, because the reality is whether people like it or not, PropTech is going to completely change the way that the industry works. And you see studies out there with people saying 80% of workflows could be replaced by computers or automation, and the reality is it's actually true. And I think I really didn't appreciate quite how much could be automated within the space until we sort of moved from pretty traditional surveying into this sort of new world of tech. And I think what people don't really appreciate is that anything you do that requires a process where, say, it's evaluation or whatever the case might be, where you simply go through a series of steps, is actually just an algorithm. Anything that's an algorithm can be computerized and coded. And I think where the issue will be is perhaps it will take longer for some of this change to take place. But once it does, I think there will be a big gap between those groups that can embrace technology and those that are unable to do it internally. And that might just come down to poor decisions in terms of tech integration and execution. And the gap might become quite significant in the future.
And indeed, I mean, that leads me very neatly onto my kind of last question, which no conversation at the moment would be complete without some discussion of kind of AI and now generative AI, the chat GBTs of this world. How do you see this kind of almost inexorable movement towards automation and digitization, particularly now using these very new but powerful kind of generative tools to actually change the job roles in the industry? Because clearly I would retain an optimistic note. I think we still need lots of people in the property industry. It's still a kind of a very kind of people-based sector, but clearly roles are going to evolve, aren't they? And hopefully it's a good news story that there'll be higher value roles rather than doing some of these mundane tasks.
And I think that's the way you've got to look at it. I think, look, there's always going to be need for people in the real estate industry, because from what we do, people aren't going to buy a house from the internet just yet. We don't think. We think there probably needs to be a person involved in that process. but never say never. I think if you had said 10 years ago to people that most people buy a car off the internet sight unseen, they would have said that's so far off it's not true, but that seems to be the reality now. But I think what will happen is that a lot of the processing work will ultimately be done, whether it's automation, machine learning, or AI, depending on what your take is on those different areas, which will probably free up a lot of people to actually say, I don't need to go out and do the comps anymore or prepare the first report, because that will all be done automatically. My role will be to check the product, whatever that might be, and actually explain to the client, this is what we've come up with and this is why. I think where it becomes quite difficult though is some of these more traditional firms where you've got a lot of people, some of those people ultimately aren't going to be needed because the size of the market's not going to increase. So just because you automate certain parts of it, which means you're more efficient, doesn't mean that you're going to get a bigger part of the market share. So I think, the reality is some of those roles will be lost, and probably, unfortunately, for some of these younger surveyors coming through the market, that might be the bit that gets the most hit, because, people's graduates programs might say, well, actually, we only need half as many people now because of X, Y, Z. And I think that's perhaps where the concern is for me. But I think that, if people embrace technology, they look at it as a tool to help them create bigger market share or whatever it is, or improve their bottom line or create a better service for their clients, ultimately they're probably going to come out in a much better space than those who don't.
And I guess in the short term, there probably is an imperative for surveyors, perhaps not to become data scientists, but to at least become familiar with the language and the basic kind of fundamentals of that, because they're increasingly going to have to work with data scientists, aren't they? Just as they work with accountants and lawyers and other professions.
100%. I think the reality is the industry will evolve. Whether surveyors want to go on that journey or not is completely up to them. But the reality is the technology exists now to be able to provide services to their clients that perhaps supersede what they're able to already deliver. So, imagine somebody looking for an office at the moment, being able to go online, do an office search. It tells them the different offices available in, say, the West End, what the fit out costs might be, what the travel times for each of their different staff are. All of those sorts of things actually already exist. It's just a willingness for somebody to put them all together and create a product that's marketable. So surveyors and people in the real estate industry generally are going to have to understand how to build a technology project. What does it look like? How does DevOps work? Or Jira? What's the process in terms of actually building a product? Who are the different people involved? What does UI UX mean, and how do those journeys work? And the longer that people leave that, the more risk I think there is that other people will simply come into the space and say, what, this real estate market, it's 40% of global assets. It's a pretty valuable industry. Perhaps we should be doing more in there. And certainly some of the conversations we've had from, I won't say who they are, but some of the very large tech companies around that you can probably imagine who they are. They are all very much looking at the real estate space now and saying, there's a pretty open goal here.
Indeed. No, I mean, fascinating conversation. As you say, I think it's around, as ever, it's so much about people and attitudes and behaviors, really, isn't it? That the tech is out there to some extent, to use that phrase. It's about people now embracing how they use that tech and make sure the industry uses it in the best way. But for today, Ashley, it's been a fascinating conversation, and I look forward to catching up again. But thanks ever so much.
Thanks very much for having me.